Obviously, we covered a bit with you got an employer share plan as well. What sort of, if any, were the shifts around or realizations around that?
As in what way? Like, as in what I learned throughout that process, or?
Yeah, and how, like, if you've changed your approach, like what was sort of the trigger or learnings from sort of diving deep into how they work and the strategies around that?
Yeah, sure. So I think with a lot of tech companies, there's, a lot of benefits for working in the tech industry, and one being the employee stock program. And so I've always, and this is a terrible story, but I think after I was like, after 2 years of working, I realized I'd had, company stocks, and I just thought one moment, I should probably log in and see what that's about. And I was obviously pleasantly surprised that it had been forced savings over that 2 year period. But I literally had no idea that I just sort of signed up to be putting that through. So, in some ways it was forced savings, but I started to accrue a certain amount, and it felt like I was really, over-invested in one stock. And that was another sort of catalyst in coming to chat to you, because I was like, I've all got my eggs in one basket, essentially. So throughout that process, throughout the planning process, it was good just to assess the different options, like modeling out what it looks like if I kept my stocks in the share program, what it looked like if I, diversified and take some of that stock out and invest in like an investment property. And we really modeled out those different scenarios. And so the things I learned was more around like sort of capital gains tax. I think the benefit of bringing out, and you'll probably know this more than I will, but taking out sort of longer vested stocks to reduce capital gains tax. There was a lot of these sort of dark arts that you guys sort of went through to work out how to I guess maximize that investment and then diversify that portfolio, because like I said, I'm over capitalized or over invested in one stock, which is risky, right? So going through that process of, can we draw down on some of that stock, still keep investing in that because you're getting a discount up front from my employer, but then being able to diversify in a property portfolio or within another sort of fund, which was quite interesting and something that we're going to go ahead with.
Yeah, and I think that a lot of people don't realise, and it's good to participate in these plans. Like you say, there's an element of forced savings. Plus, over the last few years, with the exception of the downturn from COVID, that there has been a pretty significant rally in tech companies. So you benefit from that upside. But I think a lot of people come to the realisation when you do sort of explore all of the options sort of in the light of day, that when you're holding on to these shares, that you're actually making the decision that buying the shares in the company that you work for is the very best investment that you can make. And that's often consistent with the fact that if you had $10,000 or $100,000 that you wanted to invest, you say, would you invest it in the company that you work for? Most of the time, the answer is no. But it's funny that we just don't think about it in quite the same way.
Yeah, and I think it comes down to sort of my lack of experience and understanding in investing into stocks in general. So for me, I was like, okay, well, I'm sort of being part of that world a little bit, but it's almost a safe way to do it. But as you accrue and as you sort of build up that investment over time, then you realize, well, I'm sort of invested in one stock, which is high risk, right? I mean, it also could be high reward, but I think the biggest part for me throughout this process was just getting a good plan in place to be able to have a more stable and predictable financial future, and then also how do I start to look at my stock program, because that to me was a bit of an abyss when I go in there to have a look around, like the benefits, what to be doing with it, when do I draw down? Like, to be honest, there's so much information and it's quite overwhelming. And I think Joel was great throughout that process of educating me about the benefits of the stock program, long-term capital gains tax, like I mentioned before, things around I'm getting an upfront discount. So there's some complexities through that process. And Joel really helped me through that process of education and working out what to do with that. So
It's often a game changer because it is a big deal, and you want to make sure that you're actually capitalising on the benefits that your employer has provided and actually profiting from it instead of just being a